Good Friday everyone, Viet here, and in this video I'm going to be answering some of the most common questions that I have been receiving from my weekly videos. The first question is, how long before you become proficient at identifying support resistance? When I first started learning about price action, I realized that identifying good support resistance levels is one of the most important aspects of trading price action. So what I did was I practiced placing support resistance on a random currency pair. And I would do this for 1 hour per day for each and every day for 6 months straight. If I miss out on a day, then I would make sure that I catch up by doing double on one of the following days during the week. 26 times 7, 180 hours would be how long before I become confident that I am able to identify good support resistance level. Question number 2. Your trading frequency is very low and your gains are also small, no offense. Are you only practicing on demo? No, I am not trading on a demo. I actually trade on a live account. Why is my trading frequency low and my gains are so small? Well, how often does the setup that I want to trade appear? I have no control over that. None whatsoever. All I can do is continue to monitor the market and wait patiently until the exact setup that fits all of my trading rules appear. Regarding the gains on my account, by my account, I think you are referring to the growth account, which is this account here. Let me pull it up for you. This is the account that I think the question is referring to. The gain is positive 2.05%. Well, the gains are small, but in order to have the full context here, you need to realize what is the risk I am taking per trade. And this is something that I have not disclosed in any of my videos, simply because it's not related to what I want to do on the Sunday's video. But here's the chance to put some of that into context. I actually take a maximum risk of 0.25% on each and every single trade taken on this account. This is a live account here. If you believe the way that my FX books verify these things, if you don't, then that's up to you. I don't need to convince you, and I hope this is enough to prove that. I've done a quick little worksheet here just to show you, put a little context into why I don't think the 2.05% gain is small at all, given the fact that I'm trading with the position size that I do. So if you take a look at this, I'm currently taking 0.25% risk per trade at a maximum. Sometimes it's going to be a little bit smaller because of the way position sizing works. You can't always get it perfectly right, but the maximum it would only be 0.25%. And the account has grown to positive 2.05% since inception. This account started it in June, beginning of June, and now we're halfway through October, so 5 months, just over 5 months. And I've made very small gain, you're right. But to put it into context, if I were taking 1% risk per trade, doing the exact same thing, taking the exact same trade, my gains would have been 8.2%. Moving that up to 2% risk per trade, and I would be at 16.4%. So my gains are very justified given the risk that I'm taking. I believe that the numbers are good. They're not fantastic, but they're good. The reason why I do not trade at 1% or 2% is because it is not up to me. The links to all of my trading accounts are available on my blog, but I will add it to the description of the video just in case you couldn't find it. So there's a little bit of a backstory behind this account here. It's called the PAM growth account. And what this is that this account is a model to an account that a person has recently entrusted me with some money to trade with. I'm not allowed to use their details. I can't show their account because they don't authorize me to do that. So what I've done is I put my own money into another account I would copy the exact same trade. When I started with this person and they told me that they want as little risk as possible, they're not too concerned about how much money it can make. They just don't want to lose a certain limit that they have imposed on. So when I go through the mathematics, it comes out that for me to achieve what they want, the maximum position size I'm taking is 0.25%. So that's why it is the way it is. If you were to be trading the way I do on a 2% per trade, you'll be at 16.4% up for the year, and it has been 5 months. So let's call it 6 months. Fantastic result, I would say, but of course the year hasn't ended, so we can't come to that conclusion as yet. The other thing that I wanted to point to is the fact that you can't judge a profitable trader based only on the growth of the account for various reasons I won't go into, but it's not an accurate reflection. What is a better way to look at whether or not someone or a strategy is profitable or not is look at the average reward to risk ratio and then look at the average win percentage to see whether or not it produces positive expectancy. If you look over here, I have tallied up all of my winners, and again, they're all coming from here. History, there you go. So all of that goes into here. 6 winners, 8 losers so far for the year. And this is the average size of my win, and this is the average size of my loss. Now, what do you notice? My average win is relatively big compared to my average loss. In fact, the average winner is 3.92 times larger than the average loss. And with this reward risk ratio, I only need to be right 21% of the time in order to be profitable. So far I'm doing okay. I mean, 6 winners out of 14, 43%. You look at that, you might laugh and say, this guy doesn't know what he's talking about. But if you judge a trader's performance based only on the win percentage, then you are overlooking a lot of proper metrics that you should be looking at in order to truly identify performance. Like I have always been saying, the secret behind my strategy has always been about keeping losses small and win bigs on my winners. And you can see I do what I say. I keep my losses small and I make sure that I win big. In fact, none of my losses, you can see here, none of it has been a full loss. So by the standard that I set out for this account, I am doing exactly as I've planned. I hope that answers your question. Question number 3. I mean no disrespect in my question, but how do I know you're trading what you say in your videos? I've been around the trading scene for a few years and most traders don't ever discuss their real performance. Well, I'm very glad you asked this question because when I first started trading, I also asked myself the same question. I also become very skeptical of almost anything Forex related that I see on the internet. Now, how do you know that I'm trading what I say I do? Well, from my FX book links, you can find out exactly the details of my trade down to the moment it was entered. Give you an example. Last Sunday, I talked about New Zealand USD pulling back to support and there was a long opportunity. Where are my charts? New Zealand USD. So there it was. Here's the pullback that I looked at. Saw that on the daily. As soon as this candle closes, wrote up my trading plan, review it, adjust it, finalize it, and enter into the trade. How can you verify that? Look at the timestamp on when it was entered. On the 13th, 21:27. Now, I'm not sure what is the time that my FX books is taking. It must be based on my platform time because for me, I'm in England at the moment. The daily candle closes at 10 p.m., which is 22:00. And this trade was taken at around about 10:30 in the evening. So this would read 22:27, but it's reading 21:27. And I think it is because I am setting because it's taking the time from my trading platform here. Anyway, there you go. Time the trade was taken, time it was exit. Why was it 27 minutes past the daily candle? Well, for my trading platform, the first 5 minutes of the trading day, you can't do any trading. The whole system shuts down for maintenance. And then after that, I get to see, was there any significant gaps, the closing price and the opening of the next day? Then I write my trading plan, then I review it and scrap it and start again. Round about 20 minutes later, I finalized my trading plan and entered into the trade. This was done on a market order. Price was just happened to be at 0.6640 at the time. And when was it closed? The following day. This is how I can show you that I actually do what I do. And you don't have to pay. I'm not charging anything for it. All of these are made public. Should you feel the need to, and I encourage everybody to, you can verify for yourself if the trades that I talk about in my videos, were they taken on the day, the time, the scenario that I talked about or not. This is one way that I can prove to myself and to anyone out there that I can actually trade my plan. I've got a couple of accounts up on my FX book. I'll just give you a quick look. So this is the PAM growth account. The trading style, the risk per trade, everything on this account has been agreed upon with the private investor before the account started. Every single trade is taken using the exact same strategy, the exact same trading plan. I've got another account which is a high risk account, discretionary. This is my own personal account that I started last year, and I use this to take trades that are higher risk, meaning that they don't exactly meet all of the trading conditions that I have, but I want to take them anyway. That's why they're called high risk and they're discretionary because I'm not always 100% consistent on the methodology that I trade. Please do not ask about the tremendous gain on this account. All I can say was that last year was a very good year for trading, especially the last 2 or 3 months of the year. And I was very fortunate to have caught a lot of the big wins. There is a trend following account. This is a forward testing, or this is a live testing of a trend following method that I have automated. I'm going to be testing it for 2 years and we'll see what the results come. That one there is also with real money. Last one here is a demo account that I'm doing. I'm testing this with another couple of traders on a brand new method that we've come up together as a group. It's demo and we're forward testing that. So there you go. If you want to know whether or not I do what I say and I do it when it happens, the way that I expect it to happen, this is one way you can find out. You can go here anytime and see if I have any trades open, how is it going, and also look at my past trade. I mean, I can't get more transparent than that. Last question on the list. Could you please share some advice for a new trader? And the person that asked this question is a new trader herself. I am not in any position to give any advice. That's the truth. I have been trading Forex for almost 2 years. Comes November next month would be 2 year anniversary since I started. And that sort of experience is nowhere near the level that is reasonable enough to be given any worthwhile advice. What I can do is share with you some of my own experience and I can prove that they work. One of the most underestimated aspect of trading a new trader doesn't think about is consistency. You can have an average strategy, but if you carry it out with consistency, that will beat any great strategy with poor execution. And let me show you an example why. Why is it that consistency is so important? So we'll use this account here again, and I will adjust this to show change because we don't want to be looking at pips. Okay, consistency is needed when it matters most. When I first traded this account, I was very lucky. Got 3 winning trades, Within 4 days, there were big winners. Couldn't have asked for anything better. Then, for the next 2 months, from June 24th to August 28th, I went through 6 losing trades in a span of 2 months. Can you imagine what psychological impact that would have had on a new trader? There would be doubt creeping in. It is the consistency that allows me to continue taking trade after trade, even though they turn out to be losers, until I get to the right trade that wins me back all of these losses. Consistency is one of the most underestimated aspects of trading. You need to be consistent. How do I keep myself consistent? Trading plan. Strategy and plan goes hand in hand. If I give you my trading plan and I give you a trade setup, if you follow my plan, you will come out with the exact same result as I would, because my trading plan is 100% black and white. It is absolutely clear what to do, when to do it, how to do it. That is how I practice consistency. Doesn't matter what is the currency pair, what is the time frame. Every single thing is done according to the strategy and according to the plan. The plan is there, it's pre-written before this account has started. So consistency is what has helped me set through 2 months and 6 losers. And then it allowed me to win. And I'm fortunate at the moment to be enjoying some wins. If you rearrange my trades and you put all of the losers at the front and all the winners at the back, it would not change the outcome very much. I would still be in profit. Probably just a little bit less than what it is now, because I started with 3 big wins instead. And that is how you become profitable as a forex trader. Whatever you do, you must make sure that you are consistent. You must make sure that your strategy has a positive expectancy. If you have any more questions, you can contact me through various methods on the blog, private email. I do try my best to answer the question with as much detail as possible. If I get a lot of questions that are of the same topic, then I will make some time and do another one of these videos. So that's it for me for today. It is Friday the 16th of October. Have a good weekend, and I'll speak to you on Sunday. Bye bye.